The Change Officer Podcast's Future of Financial Services series is brought to you by Holly, the world's first wallet-as-a-service platform. Stay tuned to find out how Holly can help you build your mobile wallet to increase revenue and reduce time to market.
The companies that are able to continue to identify the next disruptions, even if that means self-disrupting, by the way, and go for them, are the companies that will subsist the most in time. The winners. So the winners are those who, in my mind, have been able to write that next chapter that I was referring to. Because if you're not writing it, somebody else is writing it for you. Point is, if you can create tremendous value in today terms, whenever you are in the, on the historical timeline, you'll be able to dictate the next chapter. I think that is always what will drive human progress in my mind. Who is able to create that biggest delta of movement in terms of creating economic value, impacting people's lives, you get to decide the next chapter, and all of human almost condition follows that path.
Welcome to the Change Officer Podcast's Future of Financial Services series. In this series, we are deep diving into some of the hottest and most pivotal topics in the financial services industry right now, including personalization in financial services, embedded finance, and the mobile payment revolution. Join us as we seek the answers to critical questions such as what does the future hold for the financial services sector and where should we look for the next big disruptive idea. And welcome back to the Change Officer Podcast Future of Financial Services series. Today, I am thrilled to have Khalil, a seasoned executive and the regional general manager at Mastercard, joining me. JK brings a wealth of experience in technology, FinTech, and strategy consulting to the show, along with deep understanding of the MENA markets. In our conversation today, we'll be discussing, obviously, the future of financial services, but also the power of partnerships and, unavoidably, the role of AI in this industry and beyond. JK, great to have you here.
Thank you for having me.
Thanks for taking the time. I'm going to go straight to the topic. We had a number of episodes with a variety of different players from the industry, banks, retailers, fintechs, tech enablers. Each of these ecosystem players have their own view on the future of financial services. Not all of them are involved in every other part of the industry. Now, Mastercard and the companies alike are almost enablers of all other players in the industry. That gives you a unique angle to observe what's happening and what's been happening over the previous years rapidly, and form an angle, a point of view, and a prediction of a kind of what are we looking at in the future. So let's start by your thoughts on the change that's been happening in the industry over the previous years. What have you experienced and what are you seeing happening?
I think the best way to summarize it, to be honest, is to say or think about the biggest changes that are happening over the last couple of decades as simply the digitization of commerce. And if you start from that point, because if I say digitization of financial services, I'll have to tell you how all industries across sectors that you just mentioned, from the retailers to the basic traditional banks, or like say the more traditional or original banks, in their branch-centric model, all the way to the airlines, all the way to the telcos, how they're all trying to do financial services. But what they're really trying to do is do digital commerce. Sure. And as they do that, and they all focus on digital commerce and the transformation towards digital commerce, the value transfer between them accelerates, and it allows for different products and different structures that were traditionally maybe hostage of the financial services institutions to be able to be provisioned by everyone and anyone. So let me bring that to life for you, right? So think about the telco who in the past only sold you a SIM and a phone, today can sell you a credit card. Or think about the retailer who historically only sold you goods, whether there are produce or there are clothes or whatever. Today they talk to you about a wallet and loyalty points and carded payments. Think about a library where you used to go to borrow a book, and now there's Amazon that sells you much more than books online and offers you a card so you can benefit from a cashback. So all of them are actually participating in somehow of in the sort of business of financial services provisioning. It doesn't really mean that they're all becoming banks. I think it's just the way that digital commerce is reshaping the concept of product delivery, even product construct. First of all, what are the right relevant products? Where should they be delivered to a consumer? At which point of interaction, and where at which point in the value chain? And whether maybe these are the better places to do that than to go to a branch and get them from a bank. And so in a way, financial services are institutions and banks are becoming much more commerce enablers, and traditional merchants are transforming towards digital commerce. So the real transformation that you're seeing is digital commerce reinventing and reorganizing the economic landscape of the multi-party traditional economy is what's really happening.
I think that very well, nicely put. And what that makes me think, the pace at which everything is developing is so fast that it's amazing, but also scary to think of where are we going to end 10, 20, 30, 50 years from now, because it's evolving at a pace where at one point we'll have to hit a ceiling of some sort, or not. What's your opinion?
Yeah, I don't know if you'll ever hit a ceiling, because if you look at most human progress, always been driven by value and opportunity. Whoever can create the most value gets to dictate the next chapter in the future.
Mm-hmm.
So like today, if like two startups get created, one is able to create tremendous value, and they're able to create with that tremendous investment power, they get to dictate the next chapter. The other startup, not so well. Even if they do the same thing sometimes, right? Two startups will start doing the same thing. Like imagine two wallets, for instance, like in the UK. One would be Monzo or Revolut, and one would be some other random players. I think there was like Sterling, for instance. I think at some point, Starling Bank and Revolut started around the same time. Starling became a banking as a service provider. Revolut is now like one of the largest banks globally in terms of number of customers, not necessarily profitability. But the point is, if you can create tremendous value in today terms, whenever you are in the on the historical timeline, you'll be able to dictate the next chapter. I think that is always what will drive human progress in my mind. Who is able to create that biggest delta of movement in terms of creating economic value, impacting people's lives? You get to decide the next chapter, and all of human almost condition follows that path. Right? If imagine like you spill water down a path on a mountain, wherever water can apply the most pressure to break down, that's where the path of the water will happen. Wherever the water will hit the most resistance, there will be no path forward. So the path forward will always be the most optimal. And whoever these organizations are, whether they are retailers like Amazon, whether they are large mobile telco players in Africa, whether they are a digital bank in Europe, whether they are, and there's so many other examples of people, like Uber, how it disrupted a long, multi-hundred-year history of a carriage and a taxi model, which was very traditional. So you have to just find those players. They get to dictate the next chapter in history. I don't think there's an end to it. I think there's always ways to improve based on the new technologies and move on to the next chapter.
So we witnessed over the previous 100 years or more, companies restructuring over decades, then over a decade, then over years. And judging by what you're saying, this pace is just going to keep increasing.
Correct.
Now, what kind of organization can survive something like this?
Good question. I don't know if I can answer that question without without making some very bold statements, and also without trying to predict the future. But maybe let's talk about the winners. So the winners are those who, in my mind, have been able to write that next chapter that I was referring to. Because if you're not writing it, somebody else is writing it for you. So like everyone talks about the Kodak moment, right? There's not a lot of companies actually that are technology companies that are older than 20 years, if you think about it. Not that many. And if you say what's the number of companies that are technology companies more than 40 years, then that number comes down to like less than a dozen, right? I mean, Mastercard, Visa, American Express, and arguably every other bank is a technology company, by the way. They just run on really poor technology, right? The fintechs are obviously those technology companies that are trying to become a bank. Banks are trying to become technology companies, and at some point this is going to converge eventually, and we'll talk about that in a second. But I think my point is the companies that are able to continue to identify the next disruptions, even if that means self-disrupting, by the way, and go for them, are the companies that will subsist the most in time.
So that goes along with the premise of this show, predicting the change and what's the change ahead.
Yes.
Now, how do you see the next big thing, not necessarily a big thing? How do you see the change?
So there's, interestingly, two ways to look at the change. One school of thought is to say, with everything on the table, what could be the next change? And that's maybe more incremental thinking. But there are also some of us, and I think the most brilliant of us as a human species are those who are able to actually define it and go for it, although it does not make a lot of sense. So for instance, when you think about the iPhone from Steve Jobs' perspective, I mean, at the time, we still had phones on, the landline sets. You still had that. You still have a Motorola thing. And people still were thinking about a phone, which is a mobile, movable version of a landline. So you still had 6 things on a device, the 9 digits on a device, a few other buttons, somewhere to speak, somewhere to talk, an antenna. That actually looked like the handy phone from when we were kids, right? And then somebody was able to imagine something radically different. And so there are those who are able to iteratively, quickly kind of evolve. How Motorola evolved from the Razr to the digital, the sort of like glass interface. Or someone who invents it from scratch, or go from an iPod to an iPhone. I mean, these are leaps, and not a lot of companies can do that. And sometimes they are big bets. They're not very logical, right? Because they're either very lateral in the terms of the thinking, or they're leapfrogged by some vision that gets serendipitously executed. So there's no one form of change that I think is winning, because you need a bit of both, right? Iterative change and evolution is good for subsistence and ensuring that you continue to grow that economic value and be a leader, or at least a front runner in your pack. But disruptive leadership and disruptive change can also come, like the same way Uber disrupted transit, the same way that iPhone disrupted telephony, that iOS disrupted, the environment, that who gets to create an app on a phone, who gets to be able to develop, for instance, on the Android, anyone can create a wallet. On iPhone, you can only have an Apple wallet. So the environment, that the architecture is dictated also by those innovators and those disruptors. So I don't think there's one form of change that wins. I think there's different kinds, and they all have their risks and rewards. Obviously, one is more higher risk when it's very kind of visionary and very disruptive. And let's say the safer ways of change is a bit usually more iterative and incremental.
Hey everyone, sorry for jumping in. We'll be back with the rest of the conversation shortly, but I wanted to take a moment to thank the sponsor of our show, Holly. Within the next 2 years, 4 billion people will be using digital wallets, and the global mobile payments market size is expected to hit US $5.5 billion by 2024. It's more important than ever for financial service providers to offer a digital wallet service to their customers. Enter Holly, the world's first wallet-as-a-service platform that allows any financial service provider to build their own digital wallet as efficiently and cost-effectively as possible. Whether you're a fintech, retailer, banking institution, or insurance carrier, Holly has all the elements you need to build your own company's ideal digital wallet in a matter of minutes and manage it on an ongoing basis. To find out how Holly can increase your customer engagement and revenue, or to register for a demo, visit hollywally.com. The link can be found in the show notes of this episode, and now enjoy the rest of this conversation.
With the pace at which we are developing, going on your own is becoming more challenging. There are a few companies out there who are able to go on their own, but even them are not alone. So the importance of partnerships, collaborations is extremely important. Now, especially if we look at financial services, obviously by the nature of what is happening, there is a lot of partnerships and collaboration happening. Banks, retailers, telcos, fintechs, everyone is trying to, form that winning tandem or couple technologies and services and offerings into a winning product. You recently partnered with E&. Can you reflect on that whole aspect, and where do you see the biggest opportunities, or where do you see the strongest value propositions being built by some strategic partnerships?
Yeah, I think the end is a very good example of how two organizations came together really wonderfully and identified so many opportunities for complementarity. I think that's what really worked, right? So it was not just the fact that it's across 16 markets, not just the fact that it leverages, not just our core payment product, but a lot of our value-added services, from our services, let's say, product shelf. And the fact that we are able together to bring solutions to market that none of us can bring alone. So we need to enable their payment kind of technology infrastructure, and they have the access, they have the experience in engaging consumers. By design, we're a B2B, they're a B2C. So this B2B2C partnership was very complementary. They have the scale, we have the scale. So we can enable at scale, they can ingest technologies at scale in multi-markets. So I think the complementarity between these two organizations were, just in retrospect, it makes so much sense, right? But to come up to that, a lot of work, a lot of vision, a lot of sweat, long nights and tears sometimes for the teams to get together and be able to crank out the most value from this partnership. Now, not all partnerships have to be so elaborate and multi-market. We have also local partnerships. Sometimes it's a partnership with the government. Sometimes it's a partnership with a merchant. Sometimes a partnership with telco. Sometimes a partnership with a fintech. Sometimes it's a partnership with a startup, who's in the business of enabling fintechs or whatever. So I think you can always create, I guess the point is, more value by partnering with someone, because bringing complementarities to the table enables you both to do something that you individually cannot do.
Absolutely.
And we're seeing a lot more of that now, I think, than before. I think before there was, especially in the sort of, let's say, the 1.0 or 2.0 version of banking, it was much more regimented and clustered around, banks, providers to banks, and bank do the financial services product provisioning to customers, and that's it. Nobody else would participate. But now, because anyone can participate, because of that disruption of delivery, right? Everything is digital commerce now. Anyone can provide virtually a financial service to the consumer. And so the question is, who's the channel? Who's the product manufacturer? Who's the maybe either a banking technology provider or a balance sheet provider or a risk underwriter in the old banking sense? Right. And so how can they kind of shift roles, right? It's like kind of like there's this bench and everyone's trying to squeeze and change roles and let new players in. And the bench is also getting wider, so everyone gets more. And also everyone gets access to scale, because that's the other beautiful thing about digital commerce. So today, if you're a bank, you existed in the banking 1.0 version where your branch was, or maybe online with a clunky, presence. But today, you can virtually bank anyone, anywhere. If you have a financial service product that can be rolled out across markets, then, you're in.
Yeah.
So I think there's all these dynamics around partnership are new. And that's why you're seeing more of them. And you will continue to see more of them, because that's becoming the new norm.
Yeah. There's something very specific about this market, which might make it very challenging to operate in or to launch products in. Very segmented. Regulators are different policies. How much is that introducing friction and a challenge to actually grow the business?
Yeah. So I look at this. Okay, so you're referring to MENA. I agree with you. If you look at it at face value, more than 20 regulators across more than 20 markets, with very little harmony or synchronization between regulations or even collaborations. So it's unlike a European Union or unlike any economic union where there's a bit more harmonization and passporting. That's what we suffer from. But then, if you take a step back and say, okay, if these are the current confines and the constraints of this environment, but what can you really do? most fintech today that will be successful across market has to have a certain form that can be, let's say, not as hindered by regulation. As an example, B2B. If you're doing B2B commerce today, you don't necessarily have to have a lot of regulatory engagements because B2B business is kind of unregulated. Most regulations are on B2C side because they're into the consumer protection. Obviously, there's like KYC and KYB requirements, fine, but they're far less than the tedious regulations on the B2C side. Businesses that enable technology players or fintechs or banks are also non-regulated because they're technology players. So by design, you're just providing a technology to somebody else. So if you're, for instance, like a NIM-Card, and NIM-Card is in the business of enabling startups and wallets and fintechs and banks, they can operate in any market. Unless they want to issue their own consumer products, and that's a different conversation. Wallets, fintech players, anything that touches consumer, will they have a hard time? Yes. Will it be a challenge to enter a new market every time they want to launch a new market? Yes. It's like setting up a new business every time. So it is tedious and it will be slow. Which is why you've probably seen a lot of those fintechs always focus on the 3-4 big markets, right? They always say, I'll start in UAE or Saudi, and then I'll go to Egypt, and then go to Pakistan, and then that's about me now.
That's like
as if that's
standard slide.
Standard slide, standard go-to-market approach. So I understand the limitation, and it's regulatory, right? So there will be winners, obviously, and there will be those who will be limited by the very construct of their business model and what the regulation says. But yes, it's a limitation for sure.
All right, not as exciting topic, regulation, but very important to be mentioned, and to understand the difficulty of being a regulator that many are not seeing, at least from the surface.
Exactly,
it's a difficult job. Everyone looks at the regulator when things go wrong. When everything is nice and shiny, everyone is complaining. On more exciting or publicly more interesting topics. So Mastercard has a goal to bring 1 billion people into digital economy by 2025, which is literally around the corner. I can't even imagine that it's 20. Like when I say 2023, I'm shocked that I'm saying that out loud. So by 2025, what does that exactly mean?
Look, I think to me, it's a great question, first of all, and I'll tell you why. Because it invites the question that when people read the 1 billion number, they go like, wait, how are you going to do that? And that's exactly the question we're trying to invite, because there is a change that happened at Mastercard, speaking of change, which is we have reorganized the company and sort of the global organization to be much more focused on multi-segment coverage in market, which means in any given market whereby the expectation for somebody like a Mastercard was like, yeah, you guys talk to the banks, right? Yeah, we used to. But now we're engaging all these segments that I mentioned to you earlier, right? The government, the merchants, the retailers and the e-tailers, the telcos, the airlines, OTAs, which is the online travel aggregators, all the way to the big grocery stores, exchange houses, and obviously, like I said, governments and banks remain a key partner. So this meant that we had to create and deploy resources that focus on segments. Now, why is that important to your question? Because when you talk about 1 billion people, we're not talking about going to banks and knocking door and say, hey, can you help us sell another 1 billion Mastercard? That's not how it works. What we're talking about is really creating a force for change and trying to touch more people's lives. So in the case of government, for instance, that could be simply by enabling a new government flow that was not enabled previously on digital payments side or on the commerce side. So for instance, a lot of government disbursements today happen in very traditional ways. Either, you get sent a check or you get sent some cash to be collected from a branch. I mean, I'm not talking about developed countries, but if you look at Pakistan, for instance, that is a huge problem. So instead of us trying to solve this through a bank, we go to a government and say, hey, you're doing all these G2C, as we call them, government to citizen disbursements. How about we help you? We bring in the bank, we bring in the technology players. They will develop to you a special, maybe portal or solution, whatever that is, centralized for whatever your needs are. And then that, with the partnership with the bank, can, improve the lives of, 30 or 40 million pensioners, let's say, in Pakistan. So immediately in one play, you touch 40 million lives without you having to go and ask banks to onboard 40 million people.
Absolutely. Yeah.
So these are the scale plays. So think about the same thing in telco, right? Which is this partnership we just signed with EN. What does that mean? That means that EN, if in every market they have on average, I don't know, 6 to 12 million subscribers on average, or say range in all these 16 markets that they operate in, aggregate, you're talking about 150 million consumers that they can touch. And that's just one partner.
15% already
achieved. So the idea is to go after those plays, right? Tomorrow, I mean, we have this huge partnership with Delivery Hero. We can work on that front, on the riders, the gig economy. We just signed an agreement with the government of Punjab, by the way, to help launch the first SME gig card for all the freelancers. There's a huge amount of freelancers in Pakistan. You know, the coders, they work from home and they receive the money.
That's an interesting point that I want to just pause and just double down and deep dive. For an average person, when we say enable 1 billion people to go into the digital economy, and when you say digital economy, what does that mean actually for an everyday, as you said, Kareem rider or a coder from Pakistan, or a copywriter from Egypt? Or
look, it means a lot. It means a lot because what we're really enabling commerce. Is what we're really doing, right, at Mastercard. And commerce is two-way street, right? You have to pay and you have to get paid. It's simple. When you enable a human being to become pretty much a micro merchant, a nano merchant, if you want to call it, so that we're smaller than micro. If every individual, every consumer is a nano merchant, you're able to pay and get paid instantly. That is what it means to be included in the digital economy. Because otherwise, you're still reliant on cash. You're still waiting for someone to pay you, maybe at the end of a month, a salary. That could be disrupted. Today, gig economy workers, they get paid instantly. And they don't want to receive their money in 90 days. They want it now. And so they can force their suppliers to pay now with a credit card. And then the supplier deals with the cost of funding, which is the interest rate on a card, for instance. That's one simple way to solve for, getting paid instantly and being able to pay instantly. Because if you're getting paid as a gig worker, guess what? Now you can go out and have that dinner and go and take your friend on a date, or, buy that TV that you needed, or, whatever you need, right? Or fix that car. So improving people's lives is I think the ultimate goal here.